Hey traders, welcome back to my channel. Today I want to talk about something I think every trader needs to take seriously: stop losses. If you're out here trading without a stop loss, I've got to be honest with you, I can't respect that. In this game, protecting your capital is key, and stop losses are your safety net. Let's dive in and talk about why they're so important and how we can use them the right way. First off, why do they matter? Why are stop losses so important? For me, they're non-negotiable, right? They help me manage my risk and help keep my losses small so that I can stay in this game long term. It's simple. If you don't use a stop loss, you're leaving yourself wide open to massive losses. This market can turn against you at any point in time, and without that safety net, you're just hoping things will work out. And guess what? Hope isn't a strategy in this game. Can't I can't even tell you how many times I've been in positions where the trade would go against me, and I knew where my stop was, but I didn't stick to my stop loss, and trade would continue to go the opposite direction, continue to go the wrong, against me, and all I could do is sit there pissed off, ask myself why I took the trade, and then simply hope that the market would reverse and go back in my direction. And sometimes it did. Sometimes it was able to reverse, go back in my favor, and I was able to either get out at break even, or I was able to get out with some profits. But the problem with that happening is that over time, even though I continued to say to myself, I need to stick to my stop, and it would break through. As human beings, we don't want to lose, right? We never want to take a loss on anything. It doesn't matter what it is, right? We hate losing. So I would go into a losing trade, but I would still not stick to my stop, right? Because I don't want to take a loss. Once you sell your position, you get out, right? It's officially, you officially took your loss, right? But I wouldn't want to do that. And because I was able to get out, slip my way out of losing positions before, where the market would reverse and go back in my direction. That was a problem because it's happened before. So I would continue to hope every time I was in a losing trade that the market would reverse. And more often than not, it would just continue to go in the opposite direction. And I would take big losses. I'd blow up my accounts, back refunding them. And that's not the position that we want to be in, guys. So here's a key point about stop losses. Never set your stop based on a percentage or a dollar amount. There's too many traders making this mistake. They're saying, I'm only willing to lose 2% on this trade, or I'm going to step my stop at $500. That is a terrible approach. It's completely flawed, right? Because the market doesn't care about your personal risk tolerance. It doesn't, care about what dollar amount you're comfortable losing, right? Here on my chart, right? Here's a chart of meta, and let's say that we're looking to take a short up in this fair value gap. So before I even take a trade, or when I have a trade idea in my head, my trade idea is for price to move into the fair value gap, and then my stop is going to be on the opposite side of the fair value gap. So I'm never going to take a trade unless I know where my stop is, right? So it's part of the trade idea. It's part of the trade plan. Here's where I'm looking to enter, and here's my stop. Now, if we're looking for price to move into this fair value gap, and we're looking for a rejection, right? That's our trade plan. Our exit, right? Our stop is going to be right on the other side of this fair value gap, okay? Now, let's say that we get in, we confirm price action, right? We get into our position, but the trade moves against us, okay? Now, let's say that if we set a stop, for example, at 2%, and price moves into this level here and you're at a 2% stop loss, and it hits your stop, guess what? You just got stopped out of a trade that's not even invalidated, right? That's why the technical levels are so important, right? Because whether it's a dollar amount or a percentage amount, traders are getting stopped out of their positions, and the price did not even invalidate their trade. When you have a technical level, right? Once price breaks to the other side, convincingly to the other side of your technical level, that invalidates your trade plan. And that's when you should get out of your position. But if price has not breached that stop, there is absolutely no reason for you to be getting out of your trade, right? Sure, price may be going against you, and you may be down 2% or $500, and to some people that's a lot of money, right? But when we're in drawdown, it's probably important that we don't sit there and stare at our P&L, which is something that I preach all the time too, right? Stop staring at your profit loss, right? Don't look at it. It's not important. Focus on the price action on your chart. If you have to close your broker, if you have to close TOS so you're not looking at your P&L, do it. Just stop looking at your P&L. It's not important. Now, people are going to argue that, hey, why would you say that your P&L is not important? Well, guess what? It is not important because the price action is important and it hasn't hit my stop, so there's absolutely no reason why I should care about what my P&L is. So this is why it's important that we don't set dollar amounts and we don't set percentages. If the trade goes against you, but it still hasn't hit your stop, just stay confident in your trade and let the trade work out. Okay? That's why it's very important to set technical levels and not percentages or dollar amounts. And this is a perfect example that I have here in my chart. These stop losses are part of our overall risk management strategy, right? And if you don't have a plan for when to get out of a trade, then we're risking a lot of money, especially when we're trading options. Trading is about probability, and we're going to take losses. It doesn't matter how successful you are. It doesn't matter how good you are trading, right? We all take losses. But if we stick to our stops and we manage our risk, then those losses that we take will be small and they'll be manageable, right? And the other thing is that it's not just about placing your stop, right? It's about actually sticking to it. That means that everybody can place a stop. I could say, okay, my stop is going to be on the other side of this fair value gap. But if I'm not sticking to it, which means once price does go to the other side and it breaks with volume and I see what I need to see to say it's time for me to get out of my trade, that I actually get out. That's what we mean by sticking to it, right? And if price just moves to your stop and you ignore it, then guess what? You're just breaking your own plan. You're breaking your rules, and that's where traders get into trouble, big trouble, right? Because we're breaking our rules. You have a set of rules, guys. Stick to your rules. In this game, discipline is key. So to wrap this up, if you're not using stop losses, please start now. And make sure that they're based on technical levels. And it's not about how much you're willing to lose. That's not where we want to set our stops. Set them at technical levels because if you're setting them at percentages and the trade's still valid, you're then risking that trade that you just took a loss on to actually end up going in your favor and working out just like you had planned all along, right? That's not the position that we want to be in. Protect your capital, manage your risk, and you're going to be able to be here in the long haul. So if you found this video helpful, make sure to like, subscribe. Let me know in the comments how you feel about stops, how you manage your stops, if you even use stops. I'd be interested in seeing what you have to say. Thanks for watching, and I'll catch you next time.